Steve Leisman for what we learned from Jay Powell yesterday. We learned a lot, and the market seemed to like it.
Yeah, you know what happened here, Andrew, is the Fed delivered exactly on the guidance that it had provided, which means that it's going to quicken the pace of the removal of its pandemic emergency assistance and reverse course and take steps to make fighting inflation the main focus of monetary policy. All these steps were pretty well anticipated. The Fed doubled the pace of its taper to $30 billion a month, and that should end QE by March. It kept interest rates unchanged, but Fed Chair Powell also suggested maximum employment criteria, which was needed to increase rates. Well, it's pretty much been achieved, or nearly achieved, that is. And then the Fed projected 3 rate hikes next year and 3 more in 2023. So take a look now. The FOMC now forecasts the funds rate will rise to just under 1% by the end of next year. That's up from 25 basis points in the September forecast. The funds rate now expected at 1.6% by year-end 2023. In fact, 10 of the committee members now see 3 rate hikes next year. Markets seem to cheer that the long-run outlook looked pretty benign. They also cheered Powell's response when asked why the Fed is continuing to buy assets despite fighting inflation now.
We've learned that we're in dealing with balance sheet issues. We've learned that it's best to take a careful, sort of methodical approach to make adjustments. Markets can be sensitive to it, and we thought that this was a doubling of the speed. We're basically 2 meetings away now from finishing the taper, and we thought that was the appropriate way to go. So we announced it, and that's what will happen.
I guess translation is, I got your back, from Fed Chair Powell to the markets. Question now is not if the Fed will raise rates, but when. May remains the meeting priced in, Andrew, for the first rate hike.
Do you have any new views about Jay Powell? Was there anything in your mind that was, I mean, clearly the market thinks that something was revealed, though pretty much this is what we sort of thought was ultimately going to happen, no?
Yeah, look, I have enough trouble sort of with figuring out what's going on in the economy and forecasting monetary policy. It is very difficult to figure out how and why the market reacts the way it does, Andrew. Some people said it was less hawkish than they had expected. I thought it was exactly what was expected. What I am interested, Andrew, is this conundrum that Powell may face, which is this. The Fed fights inflation through markets by tightening financial conditions. A higher stock market is looser financial conditions. Unchanged yields is looser financial conditions. So I'm just wondering, on the one hand, you want to marvel at how Powell pulled this off. On the other hand, was he too clever by half here in that he did not cause financial conditions to tighten? That's how you fight inflation. So he may have to lean harder, take the market a little bit by the lapel in the coming months and say, hey, I told you I was raising rates. I'm not 100% sure the market heard that.